Hello again and welcome. This is Robert Schein, Managing Director and Partner at Blanke Schein Wealth Management. Today is December 9th of 2020. It's a Wednesday. I got several headlines of the day that we're going to discuss, what markets are paying attention to. So therefore, we're paying attention to it here at Blanke Schein Wealth Management. So let's get to our headlines of the day. Thanks for watching. So right out of the gate, this is a year for IPOs, IPO index, if you will, the initial public offering when a private company lists on the New York Stock Exchange or an exchange, if you will, to go public and access public sort of liquidity, if you will. And they do it for several purposes, but ultimately there's some names that we've all known through the years. But 2020 seems to be that year that IPOs are almost on record, depending upon how we close the next few weeks. Could be, second to 2014, which was a historically all-time high for IPOs. This could place us number 2 or number 1, depending upon, again, how we finish up. But the reality is why that's important. IPOs are an indication of the economy, essentially the capital markets. And ultimately, you get a rush in Wall Street and the investment banking community only if the environment is right, meaning there's a trend, uptrend in the marketplace, the economy is solid, there's enough ample and access to liquidity. That's when the investment banking world and Wall Street per se then greenlights sort of the deck of IPOs. Well, we started strong, took a breather, but then continued just since April, May, June, July, and all the way through today. On fire. Now there's also the IPOs and the SPACs. Those are also a different vehicle, if you will, that it's sort of a little bit less restrictive than an IPO. The reality is it's just access capital markets. Right now we're at about 73 billion year-to-date raise. Why that matters? Simply because that's an indication that the economy and the capital markets are liquid and running smoothly, and the trend is your friend. So we take that as a positive as it relates to investing here at Blanke Schein Wealth Management. You always want to pay attention to the IPO market, whether you're in that market or not and participating. It's really a barometer as to the health of the marketplace itself. So if you see a lot of deals, you see a lot of money raised, a lot of liquidity, that's a healthy sign that the markets are solid at that moment in time, and also indication of, maybe months ahead. We'll continue to monitor the IPO progress, but right now you always want to put that on the dashboard, and it's a very positive uptick as we're seeing. And this could be the year that breaks all years in terms of capital raised in Wall Street for these new companies going from private to public markets. So our second topic today, why are markets making all-time highs? Because ultimately, clearly, there is a divergence in the real economy and sort of the Wall Street economy, so those companies that are public. If you followed me on a daily update for quite some time, I've been very specific and clearly pointing out the differences as to, even going back in March, April, and May, as I advised our clients here at Blanke Schein Wealth Management to stay invested. Simply because what's going to happen is the big and the strong are going to get stronger. Well, here's what I mean. Let's go to the board for this right now. Right now we're going under round 2, if you will, of across the United States, coronavirus cases are rising, hospitalizations are rising, therefore another round of restrictions have to be put into place. And we're in California here, so it's no different. In fact, we're probably more locked down than most. But that being said, the point here is that access to the public markets and liquidity is huge. So what I have on the left are big box retailers. I have round 2, which is the second lockdown right now that we're presently in, depending upon regionally where you are across the United States. And the state mandate in California, small businesses are just getting crushed, absolutely crushed. Outdoor dining is now canceled. We're in Riverside County, if you will, and our numbers are elevated. So therefore, we've shut down for outdoor dining, even though it's 70 degrees outside, gorgeous weather. People pay good money to be out here when times are right again. And hopefully maybe next year you will be here again. But small businesses are forced to shut down right now. Well, the key underlying factor as to why markets are setting all-time highs is, let's go to this big box retailer or even big box sort of restaurant, if you will. Even though they'd be forced to shut down, they still have, the bottom line is, access to capital markets. Remember when I said earlier, the IPO market is the ability to sell a portion of your company or issue debt to then gain that capital, put it on your balance sheet, shore up your balance sheet for short-term cash management needs. But also it allows and provides you the opportunity, and I would obviously argue it's a strategic advantage to weather the storm, right? Round two, whether we have round 3, 4, I don't know if this is a Rocky, one of the Rocky videos, but the small business owner right now is definitely Rocky Balboa versus Ivan Drago, if you've I think it's Rocky 4, one of the best ever. That being said, they have access to the capital markets, they have lending and credit facilities. What the market is doing for these publicly traded companies that are big box retailers, you're seeing them, governments have mandated you can't get coronavirus in there because you can go do all your shopping there, but you can do it at the local restaurant, I guess, down the street. I don't know the difference, but the reality is the markets are paying attention to companies that are the largest companies in not only the United States, but in the world that have access to all of this. So while these businesses are shut down, and right now by Yelp, they're saying by 30% of all small businesses in America are going to be wiped out if this persists anytime soon. And ultimately we had the PPP government assistance loans and the small business grants that are, there, but these are mom and pop shops that are coming out of their personal savings. They don't have access to, the credit markets, the capital markets, and ultimately, they don't have maybe an online setup like the big box retailers do, where they're going using technology and have the money to spend and invest technology to go directly to the consumer right now. So their advantage is second to none. Plus they're getting the government to sort of be on their side of this game right now. So this is unbelievable. So my only take home point is that the markets are heading to new time highs simply because those businesses that will survive round 2, 3, 4, 5, these businesses go out of business. Where does this business get picked up and absorbed ultimately later on? Right here. So the large get larger. Those that have access to liquidity in the capital markets will survive, but they're ultimately going to get larger. So the markets look ahead into the future as to those that survive. The balance sheets gets not smaller, they will get larger. The profits will get larger. The large survive. Those companies are on the New York Stock Exchange. They're the Dow Jones Industrial Average, the S&P 500, the NASDAQ. These are publicly listed companies. So it's the section of Wall Street publicly traded companies that are the largest versus the small business owner that I don't have access. Now, Congress right now is doing the fun sort of Lucy hide the football. We're going to do another, government assistance sort of federally aid CARES 2.0 Act, and we're going to fill up these buckets again for you to run and ultimately go get the loans that we could maybe never pay back and so on and so forth, and then try to hire those people back. I don't know. They've been doing that since March, April, and May earlier this year. The fact that they're playing politics and the governor of all these states are just basically kicking small businesses when they're down. The only solution, guys, is to shop small business, support small business in this holiday season, and ultimately, those who are hurting and those that need help. So if we're going to sort of vote with our consumer dollar, if you will, do all that you can to support small businesses one way or another, because they definitely need our help right now. But if you're investing, you ultimately are going to win for the long run simply because it's a game that has an unfair advantage to those that are publicly traded right now. And that's why markets are sort of continually hitting new highs. Finally, who's going to pay for this, right? So while Congress is trying to figure out what kind of stimulus, what number, whether it's $1 billion or trillion, who knows? We're up to $7 trillion this year, both with what the Federal Reserve has done and what Congress has passed, and all the additional federal aid and stimulus, even by states, if you combine all of that. That goes to our national debt, if you will. And even though we have interest rates that are all-time low, especially the 10-year Treasury, and we can ultimately finance our way out of this and monetize this debt, that's not a good thing, and that's not the way out of this. So ultimately, we will look back and history will prove that I think there's definitely better ways of handling the way all policymakers, and I don't care, this is not political, but all policymakers have handled this. Simply because we've got so much debt now to service going forward. And just wait till interest rates go up. And if interest rates do go up, that debt servicing rises. So that's the concern on a go-forward basis. So who's going to pay for it? We all are. Your taxes and my taxes. Ultimately, and there's going to be a COVID surcharge. In here, all of the businesses, once they survive, there's going to be a surcharge on all of these businesses. And ultimately, I don't know if you heard this, but New York right now is looking to pass legislation that if you have a package delivered, there's going to be a $3 surcharge to New York City for those packages delivered to make up for, I don't know, mismanagement or the COVID surcharge is what we're going to call it going forward. How could you do that? We're all going to pay for this. What the hedge would be ultimately in this period of time of low interest rates, business is getting stronger and bigger and ultimately looking into the future because they're going to survive, there is a huge case to be made as to being a long-term investor. It's your hedge. You need assets to grow, like stocks and real estate and precious metals. Anything that has an inflation hedge over time will grow its way out of this simply because of what the policymakers are doing today. This has been history through many, many years of just economics 101. And that's why markets are still going up, and because interest rates are super low, we are flooding the markets with liquidity, and therefore there's access to capital markets, and businesses can still survive. Once they survive, the earnings are there. And oh, by the way, corporate earnings, which we pay attention to, haven't dipped that much. If you strip out the service sector and the travel and leisure, the corporate S&P 500 earnings actually are on track with all things considered in terms of their targets for this year. So that's it. I know it's a sort of a lengthy message today. I appreciate you watching. Like, subscribe. Please share with friends and family. And hopefully you learned something today. I really appreciate your time today. Take care. We'll see you again.